Let's talk money.
Welcome back. You've been sending in your mutual fund questions to us, so let's straight away get to them and try and answer as many as we can. The first query is coming in from Sam, and all of them have come in to me on Instagram. By the way, you can always reach out to us on Insta or email and social media. He's saying that I want to start an SIP in about 3-4 funds. What would the ideal split be in terms of the type of funds where I should divide my money in? Harish, I know this is very incomplete information for you to answer on, but generally, I mean, if someone has, let's say, X amount of money for immediate lump sum investing, how should they divide it?
So I would say that, put majority in an asset allocation because you're putting in a lump sum amount, right? And that will automatically take into it. The second thing is you need to expose yourself into segments which are not covered by this asset allocation product. So maybe either you can get into thematic funds or you can get into, say, small cap, mid cap, because generally the asset allocation products are more large cap biased, right? So a combination of these three, I would say bulk of your money in an asset allocation kind of a product, stroke flexi cap. These are the two things that I would say would be the fulcrum of it. And then you can have satellite positions in, say, either in a thematic fund. At this point of time, we think banking can be a very good thematic fund. So that could be something that one can look at. And then to get into small cap, etc., which need to be a long term, at least with a 5-7 year kind of horizon.
And he's specifically saying if I want to start SIPs, then it should be the same approach?
No. So if you're doing SIPs, then, the more volatile asset class, the better it is because you're getting better units at this point of time, right? So therefore, then you need to move into, say, small caps or thematics a lot more. So I would still say that the mix needs to change. The core and the satellite still remain the same. But if you're looking more as SIP, the satellite can be a lot more.
Maybe more mid-cap, small caps.
And the weightage to the satellite can be more than the core.
Than the core. Got that. Okay. Let's move to the next query. And this is the question coming in from Neil Vakaria. He's saying, I'm looking to invest in a domestic manufacturing fund for the next 5 years. Should I do it, and how should I allocate my money? What an interesting question. We've got someone who's been managing a manufacturing fund. So who better than Harish to answer this? 5 years time horizon, looking to play a specific theme, manufacturing. Is it a good time?
I think it is a good time for a long-term investment. There is a massive amount of reset of supply chains, and we all know about what Trump is trying to do. I think India is a very large market, and India is importing a lot of stuff. A lot of those supply chains will be built in India. So I would say that manufacturing is in a very good shape from a medium to long-term perspective. I would definitely think, given the fact that it has done so well in the last 3-5 years, the better route would be to come through an SIP, because there is likely to be some kind of consolidation, and for the investor to get the benefits of that consolidation.
Okay, thumbs up to investing in a manufacturing fund, but stagger it out. That's the advice. Quickly, time for one last question. This is from Subhashish Day. And I think his question is probably, it echoes everywhere, because he's saying, is there any sign of recovery in mid-cap funds? Harish, everyone is, and I do this for the regular market, shows as well. Everyone is still coming and saying, no, large caps are better. There's still, valuation discomfort in mid and small caps. People with these funds are wondering what next.
So I think that, it's only a question about expectations and horizon that is needed. I think there are some great Indian mid-cap companies and small-cap companies that are going to create outstanding wealth. It's just that a lot of that wealth got created in such a short time span that there is going to be some amount of prolonged consolidation phase before you get that.
So low return period, be ready for it.
For at least the next 12-18 months, I would say. But then eventually, yes, we do think that they will create significant wealth. India is a wealth creating market. There is no doubt about it. It's only about managing your expectations and committing to a slightly longer term horizon than looking at it every 6 months or every 12 months.
Okay, I think that's very sane advice, and that's a good optimistic note to end on. Don't look at it as a short sprint. Look at it as a long marathon. And perhaps you'll be, quite happy with your mutual fund investments. Harish, thank you very much. This was very helpful. Thank you for dropping by and giving us all this wisdom today on the show.
Thank you.
Well, with that, we are out of time on this edition of Let's Talk Money. Remember, you can keep reaching out to us. Tell us what do you want to hear more on, what questions you want answered, and we'll be here for you again, same time, same place next week.
Let's talk money.